fantastic panel with me today. Let me introduce my panelists. First, we have Denelle Dixon. And second, we have Jonathan Damapalan. And third, we have Rory McFarquhar. And fourth, we have Renee Reinsberg. Now, Denelle is the CEO of Stella Foundation. She was the COO of Mozilla before that. Stella, of course, is an open source platform. It's a fantastic world out there. She will introduce to us how Stella works. Jonathan has had 25 years experience in telecommunications fields. He's the CEO and founder of eCurrency. Now, eCurrency has been a service provider and a solution provider to central banks to implement CBDC solutions. Rory is the Senior Vice President with MasterCard. He was the Senior Director for Global Policy in Google before he joined MasterCard. Now, many of you use a MasterCard. We know what a MasterCard company is, but you probably don't know that MasterCard now calls itself a global multi-rail payments technology company. Last but not least, we have Renee Reinsberg. He is the founder. He works in the C-Lab. He's the founder of Zelo. Now, Zelo means purpose in Esperanto. You may know that Esperanto is an artificial language designed or devised to facilitate international communication. So we have a fantastic panel today. They will share with us perspectives on cross-border payments, how the market landscape will likely evolve in the next 3 to 5 years, and how do we ensure competition in this digital world? What is the role of standards and the interoperability to ensure there is sufficient competition in this heightened competitive age for cross-border payments? And thirdly, what is the role for public-private partnerships in ensuring that we have the best outcome, both in terms of efficiency and stability of cross-border payments? Now, before I ask the first question to my panelists, let me also emphasize, this is an important point, that having these fantastic guests to speak at the IMF event, of course, is our privilege. But I want to emphasize that it does not mean that IMF endorses their companies or products. So that's an important point for me to emphasize. Now, without further ado, let me invite Denelle first to share with us your view. How do you see the cross-border payment markets evolve in the next 3 to 5 years? So what do you think are the factors that would contribute to success to companies like yourself? Thank you very much.
Oh, thank you. It's such a privilege to be here. I think that the answer to that question, particularly the 3 to 5 years and what this looks like in 3 to 5 years, heavily depends on 3 things. I think you have to first consider how good we are at developing easy use cases for developers to be able to develop on top of our open source decentralized network and others that are out there. So that's the first issue. The second one is how much we focus on the use cases themselves, so solving real user problems versus focusing on the technology. And then the third area is really this interoperability point and how good we are at enhancing the existing financial infrastructure that's out there versus trying to supplant it. So I think that it depends, like how we approach each of these 3 areas. I hope that we continue to approach it from a use case piece versus looking at just trying to enhance this technology that's out there. Because if we are really trying to solve user problems, and we do that with ease of use in mind, with looking at user interfaces and making sure that we're making them simple, and if we consistently focus on this notion of standards and interoperability, we are going to get to the place where, if we do this right, we'll get to the solution in 3 to 5 years that looks like a reduction in friction for the end user and for developers that are developing on these platforms. We'll get to cost efficiency that makes it so that we actually see a decrease in the cost for the end users with respect to these cross-border payments. And we will get to the place of enhanced competition and innovation. And I think that this is all good for the end user, because I think if we focus on each of these areas and we really, really try to make this a competitive platform that allows for awesome innovation, this is what we saw in the early days of the web, when we saw interesting and different use cases that came to light because there was this focus on standards and innovation and competition. And the winner ultimately in that is the end user. So I look forward to 3 to 5 years out there, and I hope that we've done all of these things and that we see this really vibrant marketplace out there of ideas, and we see the cost efficiency that I think that we should see with respect to these pieces.
Thank you, Denelle. I will come back with a couple of follow-up questions, but maybe let me turn to Rory next. Just to ask you, you represent a very well-established player in the cross-border payments market, that's MasterCard. Now, how do you see going forward the relative comparative advantage of established players like yourself? And I know that MasterCard has been, rebranding yourself. Now you call yourself a technology company, a multi-rail payments technology company. But there are, new players like Stella, like René's Zelo, and of course we have the Libra that's sort of in the making. How do you see these relative players compete? What's their comparative advantage in this market? Thank you, Rory.
So thanks a lot, Dong. And first of all, I'd really like to thank the IMF, to thank Tobias, Managing Director Georgieva, and others for pulling together this conference. And frankly, I'd especially like to thank you for holding a private sector panel, because as the CPMI report that is being unveiled today really underscores, there's no way of solving the problems of cross-border payments with the public sector alone, or frankly with the private sector alone. It really is going to take a very comprehensive, strong dialogue among all stakeholders because this is an incredibly complex ecosystem with thousands of stakeholders, thousands of participants. And so moving that whole ecosystem along is going to take dialogue. And so it's great to be here and to be part of this conversation. Then to get to your question, I think your introduction already suggests that I'm not exactly going to accept some of the distinctions that you draw. So MasterCard is indeed, we've been around for more than 50 years, but we are not sitting around and watching others innovate. We are very central to efforts to innovate in the cross-border arena. We have, I think, the third highest number of blockchain patents of any company. We are extremely closely involved in the fintech space. We have a fintech accelerator that reviews and invests in many of the most innovative companies out there. So we are very much remaining on the forefront of innovation in this space. All that said, it has to be acknowledged that some of the new entrants, the new competitive players in cross-border, companies like TransferWise, companies like Payoneer, have raised the game for the entire industry. They've created much better user experience. They've reduced cost, created greater transparency, and that has had a knock-on effect on everyone involved. And frankly, as for Libra, if it weren't for Libra, it's not even clear we'd be having this conference today. So they deserve, a huge amount of credit for putting pressure on the public sector, established players to, really accelerate innovation. I'd say two more things. So first of all, I completely agree with the way the CPMI has approached this overall effort, which is to pursue it in two parallel work streams. First of all, to address the large number of friction points in the existing system and see what can be done. And this is an area, again, where MasterCard is trying to innovate. We're trying to use our multi-rail capabilities. We have a product that enables lower cost, more predictable, more transparent cross-border remittances, and enabling payment to literally billions of cards, accounts, digital wallets, and cash out agents. And then the second stream is to explore some of these completely transformative infrastructures, such as the ones represented by my colleagues on this panel. And they have huge promise. They are not going to be the be all and end all, and we can't stop working on, for example, aligning AML standards across borders, because those are going to be a problem with any infrastructure. But I think that what the CPMI has done is really identified the key set of problems, and we all have to work together to solve them.
Thank you, Rory. I really appreciate the points you have made, particularly that the competitive pressures from the new players have shaken up the established players, and that's a very extremely interesting point. We'll come back to that, I think. But let me turn to Jonathan now. You heard in the first panel that the governors they are working very hard on potentially issuing CBDCs. So what do you think of, what kind of role do you think CBDCs can play in cross-border payments? Would they substitute or complement the private sector solutions? Grateful for you to share your view.
Thanks, Dong, and thanks for the opportunity to be here to address this. So when you look at cross-border and cross-border payments, we quickly get to the underlying factors that are pervasive today in cross-border payments that make cross-border payments less efficient and potentially more costly. The primary drivers there are settlement risk, counterparty risk, and the need to hang up a lot of liquidity to execute a cross-border payment. And the private sector is essentially left on its own to try to solve these problems. So where e-currency comes in, and what we work with central banks on, is to make the central bank an important party in cross-border payments, and in fact in central bank digital currency. By empowering the central banks to provide the ballast necessary in cross-border payments, you are actually able to bring down the risks, such as settlement risk, counterparty risk, and you can even eliminate some amount of liquidity risks that are in the cross-border space. And the way we solve it is with technology, by providing the appropriate security technology for central banks and the public sector to underpin cross-border payments. Now, very important here is that the private sector is not in any way eliminated in the process. The private sector also participates. In fact, the private sector executes the transactions. The central banks provide the ballast through central bank digital currency or a public sector bus that can enable cross-border payments, try and reduce or mitigate counterparty risk, try and mitigate settlement risk, and essentially take some locked up liquidity out of the system. And we think we can do that to try and get central banks at the same level as the private sector in enabling cross-border.
Thank you, Jonathan. Maybe I can turn to Renee, partly in responding to what has been said by the previous three panelists. Do you have anything you would disagree? Also, I have this question that in some of the comments out there that Zelo is considered a competitor or potential competitor to Libra. Now Libra has 2.5 billion users already there in the ecosystem. So how are you going to compete with that such a giant? Um, in this kind of thinking, maybe you can share with us, your thinking. How do you fight back that battle? Thank you.
Sounds good. And yeah, excited to be here. Thanks for hosting us. Maybe just 3 quick points that cover that a little bit. The first one, I think it's important to keep in mind that cross-border payments are actually expected to rise pretty significantly. I recently saw a number by an official of the Bank of England who said that 2017 we had 150 trillion, and over the next 10 years, so till 2027, that was expected to rise to 250 trillion, so an increase of over 100 trillion, which that's significant, and actually even creates room for new solutions to take up some of that space. I think one factor that we see a lot is the deterioration of correspondent banking that is particularly challenging for island nations, and so there are also new challenges that are kind of arising that can be addressed with new solutions. I would say, and this addresses partly the Libra question as well, I think so much will depend on interoperability and user experience, right? And I'm not convinced that there's one solution, one kind of rail that is going to solve all use cases and be the best possible product for all communities. And so I think those who focus on interoperability, I think, actually have the best chances of being an integral part of that fabric. And I think that's less clear to me how Libra thinks about this, given that they're sitting on a phenomenal user base across Facebook properties. So maybe it's less prominent of sort of a concept to think about. But when you're small, a small community like the teams building Zelo, you have to think about, right, how do you plug into some of the other building blocks? And so from the get-go for us, there's been a lot of focus on interoperability. And in fact, one of the teams that has been building interoperability bridges between, for example, Bitcoin and Ethereum just decided to build a bridge between Bitcoin and Zelo. And we see that happening a lot, that now that even with starting within the crypto ecosystem, right, there's also a lot of work happening around establishing these bridges and giving consumers and giving users the option to more seamlessly use different systems. Maybe one last aspect, which is the user experience, which Denelle also brought up. I think this is where I see the biggest upside, right? And just hearing, seeing the user research in many markets around the world. If we talk about, for example, remittances, one of the cross-border payment use cases today, we live in a world where in many places, our phone can really, do anything, get us food delivered to our house, but the operations of actually getting money from A to B still haven't changed all that much. So I think this is where personally, I'm very excited to see what will be built on this new infrastructure, and I think that's where a lot of the improvements can come in.
Thank you, Renee. Maybe let me turn back to Denelle, also given your experience at Mozilla. So how do we ensure that in this new world, we will have interoperability across different types of platforms? Now, I understand that on Stella itself, you have, tokenization allows you to trade all sorts of tokens. It can be CBDCs, central banks can issue CBDCs on your platform, if I understand correctly. But how do you actually scale it up? And how do you ensure that, if others, for example, MasterCard has launched a platform, as I understand it, for central banks to test their CBDCs on their platform. Now, for a central bank out there, how do they decide? If I test on Stellar network, would that work also on the MasterCard network. So these are the issues from a practical point of view would be important for the policymakers to understand. Maybe we can start from Denelle, then maybe swing back to Rory as well. Thank you.
Yeah, thank you, Dong. This is such a great question, and it's one of the things that actually hits back to the question that you asked about Libra. I think that the focus that we have on open, decentralized, permissionless networks, which is what Stellar is, and which is what we focus on building, and we try to actually integrate with the incumbents, like with respect to MasterCard, for example. We have to make it really simple, especially when it's a new technology and you're actually trying to integrate with these different stacks that exist out there. You have to make the on-ramp to the network very simple. And that's where the interoperability and the standards come into play. And from just all of my years of focusing on standards, and this is what we did exceptionally well at the very beginning of the web, and when we focused on the internet technology, there was a massive focus on standards and trying to build this ecosystem that anyone could join if they chose to. And all they needed was to understand like how to get onto the internet, and then they could build their own website, or they could build other engagements and opportunities with end users. That's what we're trying to do here in what we call the Internet for Payments. So it's the same idea. An open permissionless network is important. And making sure that network is easy to interoperate with, which is what we try to do and strive to do here at SDF and on Stellar, but lots of entities out there are trying to do the same thing. This is what creates the opportunity for there not to be a single incumbent, which I think is hugely important in this space. Because we've seen years later, 20 years later, with respect to the web, what happens when certain players take over and own all of the full stack. It makes it very hard for new ideas and innovation to come up. And so the idea is, if we could continue in this space to make it simple and to create that interoperability and that focus on standards, then we actually can continue the notion of this innovation, which is crucially important to success here. So I think if you think about get the on-ramps to Stellar, for example, making it easy for issuing tokens on and issuing value on Stellar is very simple. It takes one line of code to be able to issue whatever token you feel like is important for your business. There are gold tokens, there are silver tokens, there are USD tokens, there are fiat-backed tokens that exist that I think are super useful and very similar to what CBDCs can be. In fact, you could see a central bank issue a CBDC and then have the private sector and these these entities out there that are exceptionally good at having that consumer focus. These fiat-backed entities, they could actually be the glue for the consumer base and the CBDCs to be issued and used on a variety of different networks that are out there. So I think in all of the years that I spent focusing on how to build standards, it takes that you can show the simplicity of it, and then you come together and you really try not to be the winner-take-all model. You really try to understand that in this model, the winners are, again, the ultimate either developers or the end users who are focused on really trying to achieve these cross-border transactions. And you really try to use that glue of making it simple and using standards to get there.
Thank you, Denelle. Rory, so how do we, given the importance that we should attach to interoperability, the internet works reasonably well because, we have the common standard, we have the common protocol. How do we go, achieve that in the digital currency world, in your view?
So first of all, I would completely agree with Denelle's point that interoperability in the area of digital currencies is absolutely critical. So it's hard to imagine a world in which governments have completely supplanted the private sector in the currency space. So a fully governmental monopoly seems to be not realistic. The governments aren't necessarily going to be the best place to deal with things like user experience, to interface with customers, to innovate. But conversely, it's also hard to imagine governments ceding control to a single private entity. And so the space in the middle, where you have on the one hand, competing private players, but maintaining a degree of interoperability so that you don't get these balkanized systems that can't transact with each other. That's where we are today, and that's obviously the vision we should strive for the future. The one thing that I would caution about the analogy with the internet is that the financial system isn't a permissionless world in the same way as the internet is. There are, very well developed and frankly necessary regulations over money laundering, countering the financing of terrorism, and so on. And when we looked at, for example, at the first version of Libra, we just could not get ourselves comfortable with the idea that all of those concerns were met in the structure that they were putting forward. And so that was not something that we could be a part of. So even as it's vitally important, including in these conversations about central bank digital currency, to bear in mind interoperability, to make sure that every private sector wallet that holds central bank digital currency can transact with a different wallet. Even in that world, it's like absolutely critical that we maintain a focus on compliance and on achieving the same standards as the financial sector, as financial regulators demand of the existing system.
Thank you, Rory. So Renee, maybe I can come back to you. So for a relatively smaller player, so how do you see the leadership role? Who is going to, who should take the leadership role? How do we organize the discussions or the processes to achieve some standards or interoperability in the digital currency world?
Thanks for the question. And this may be a good point to just give a little bit of context about Zelo as well. So, the three founders, three of us started working on what has become Zelo 3 years ago. But over the especially last year and a half, since we open sourced the technology and launched the first sort of testnet, as it's called, before the full launch earlier this year, we've seen hundreds of organizations actually kind of join us and start collaborating and contributing to Zelo. So today, the Zelo Alliance for Prosperity has over 115 members all around the world, and that includes big organizations like the Grameen Foundation that actually is just started using Zelo and Zelo Currencies for a COVID-19 cash relief program in the Philippines, all the way to some of the established kind of wallets and merchant operators out there. And I think that sort of ecosystem approach is really important. First, to establish bridges to the established and existing financial players and ecosystem, but also because this is a task that's just too big for any one company or any one team to solve. And so kind of more specifically, kind of to your question, I would probably push back a little bit on what Rory just said in terms of the financial system isn't or shouldn't be a permissionless world. And I obviously agree at sort of a higher level that has good reasons, but I think there's a lot of room for innovation in the permissionless side of this. And when we kind of think about local currencies, functional currencies, community currencies, that I think we'll see an explosion of currencies and digital assets happen just because they're finally able to be used at a much bigger scale through technology, and most importantly on mobile phones. And I think there's lots of good precedent, even with some of the mobile money systems, when it comes to, say, KYC, that if within a certain community there are transactions happening, with kind of small sort of values, small amounts, that one can apply a slightly different system than if someone walks into a bank branch in Germany or in the United States. And I think I see us being at a critical point in time where finally, and we've been talking about blockchain solving some of the problems around financial inclusion, for that to finally actually start happening. I think it's really important for regulators and lawmakers right now to look at this and educate themselves and see what this technology can do before just applying just kind of an old framework to this new technology. Specifically, I would say, there's the point Denelle made earlier about open permissionless systems. I think those are really crucial and critical, and we're seeing this with Zelo, but from an innovation perspective, there are, people today building peer-to-peer universal basic incomes on Zelo, building remittance solutions. They're integrating locally in Kenya with M-Pesa, right? All these things happen when there's an open permissionless system. It's all stuff that I would have thought, yeah, is really great if at some point, our team can do it, but, we would likely never have gotten to that point because we would have been busy solving other problems first around the infrastructure. And so I think making sure from a kind of official sector perspective to encourage these open permissionless systems, I think is critical. Second, I think is to think about how to remove barriers of entry for new participants. And I think this is kind of the point about looking what's happened with the web, right, where some of that has unfortunately gone wrong, and I think we have a chance to we have a second chance here as we think about remaking the financial system. And third, I would say this is a great point in time too for the public sector to look at some of what's happening in the private sector and embrace some of these newer technologies and collaborate. I think at C-Labs, we have a lot of conversations where we're doing pilots with public sector entities. My colleagues, Jay and Ezekiel, are also part of several working groups at the ITU Standards Committee. And so I think this is a very important time for everyone to come together and learn from each other, understand each other's perspectives. And I think that will kind of lead to better outcomes.
Thank you, Renee. Let me now turn to Jonathan. I think eCurrency has been talking to various central banks. You want to provide solutions on central bank digital currencies. Now imagine a world that different central banks have issued their own CBDCs. Now if they are all of different designs, different standards, and if you want to trade them, that's not so different from the current system where you have to get a quote, bilateral quote. It's not a particularly efficient system if you need a lot of human intervention. So how do you actually get to a situation where these CBDCs can be traded automatically on a common platform? Are central banks thinking about that problem, or what do you have any views on that?
The good news, though, is that central banks are thinking about this, and there has been a recognition that in the digital realm, central banks need to quickly adopt a new framework. I know as I'm listening to the other speakers talking about currencies, it's a loose term. People just say, well, we can trade this currency or that currency or make up a new currency. And we have to be careful when we talk about currency, because currency is essentially a sovereign instrument. And in every country, it is underpinned by the law of the nation, or in some cases, the law of the union. And these currencies represent a liability on the central bank. It is not a casual instrument where someone wakes up and says, now I have cooked up a new currency because my latest technology allows me to define it as a currency. It doesn't work that way. So the point that you're raising, Dong, is that we have sovereign instruments that are underpinned by the law of the nation that creates a currency that works within the nation's boundaries. Now, rising above that, we have some international reserve currencies. So you have reserve currencies that are also recognized as assets by multiple countries. There are several of those. And so for a transaction to take place from country A to country B, it's not just a matter of two currencies sort of coming together. It's a matter of exchanging from the originating currency into a reserve or a recognized international currency and then back out again. And this is primarily true in developing markets, in developed markets where the country's currency happens to be a reserve currency, while there is essentially only one exchange that takes place, or the recipient is willing to accept the reserve currency. In the digital world, the question that you asked is quite pertinent. In the digital world, with two countries having a central bank issued digital instrument, how does that exchange happen? Now, the way we see it is that for that exchange to happen in an efficient way, number one, central banks have to participate. So this is not an exercise with just the private sector trying to make this happen. The bilateral nature of two central banks that are in the payment flow have to participate because they become ballast, basically underwriting their own currency on what we call, or what we would think about as, an international cross-border bus. Once they are the ballasts on this cross-border bus, private sector participants can participate because they're essentially regulated by their in-country central bank, and the rules of the road are pretty well defined. And so there can be a direct connection between private sector participants in country A and private sector participants in country B. In the middle, there has to be an automated mechanism for the exchange to take place, meaning country A's originating currency gets converted into an exchange currency, and country B then subsequently turns it back into the local currency. And this whole process can be automated as long as the security boundaries of the bus are secure, so that the liquidity or the transaction within the bus can be ensured. Exchange from A to B, A to common currency back to B can take place. The participation of the central banks is what provides the ballast on this bus. Once the central banks are participating, the ability to execute from a CBDC in country A back to a CBDC in country B becomes eminently doable. The technology then that allows this to happen has to be essentially adopted by the central banks. And this is what e-currency focuses on, is to really allow central banks to get up to par on the technology, such that the private sector participants, whether that be commercial banks, e-money operators, payment service providers, or even new entrants like some of my colleagues are, can then participate on it to allow for this cross-border thing to happen. I want to go back to the original point I made when I spoke earlier, which is eliminating the risk components, the settlement risk component, the counterparty risk component, and ultimately reducing the amount of liquidity needed to execute a cross-border transaction is what will bring the cost of cross-border transactions down and the risks associated with cross-border transactions down. So that's what we try to enable.
Thank you, Jonathan. Does any of the panelists have anything to push back against on what has been said so far? Renee.
I have a quick rebuttal. So I actually fundamentally disagree with Jonathan. And, you know, I grew up in East Germany where there was one TV station and one radio station. And, you know, there wasn't really much choice there. But then it was the rise of the internet and obviously, you know, the wall coming down. So it's good to know what would have happened if, you know, without that. But, you know, now every kid out there has a YouTube channel and, you know, a podcast. And so we've seen just an explosion of, you know, expression. And I think with currencies, and I do use the term currency, I do see it as similarly. I mean, currencies have been a thing before central banks issued them, right? I mean, the first form of currency of money were things like shells, and today there are many examples around the world of things like local currencies actually really benefiting communities and even driving kind of GDP, if that's a measure we're using for showing growth. And so I would say I think the only chance for CBDCs to actually be used from a retail perspective is to make sure they don't fall behind in some of the benefits that these other currencies, as we may want to call them, offer. Otherwise, it may be like the fate that happens to the state-owned TV channel, where it's only used 10 minutes a day versus the rest of the day is spent on YouTube and Spotify. So, I mean, that may be a little bit crass of a view, but I think conceptually, I do think that there's just going to be a big uptick and an adoption of these other currencies. And so I think for central bank digital currencies, they need to kind of tap into all of the same kind of technologies and features. This is where interoperability comes in. But this is also where I'm a big believer that they need to happen on open permissionless infrastructure.
So Renee, I would have fully expected you to disagree with me. I'm really getting to this because I think this will be the fun part of this conversation. So I think there's a reason why we don't use seashells anymore. So or coffee beans or stones or rocks. And the reason is that there is no underlying value associated with a seashell or a rock or a coffee bean. And for the same reason, cooking up new forms of currencies, just because we're able to give it a name, I believe will sort of take us back to the same place where there has to be some sort of underlying pretense for the existence of that currency. And the underlying pretense is not technology. The underlying pretense is really the ability of a central bank to stand behind that currency and say, this is the currency of this country. And in the early days of central bank currencies, and I'm talking about physical currencies, the ability for central banks to do that took a little while to stabilize. But now, for the most part, with a few, very, very few exceptions around the world, central banks have successfully found a way to underpin that currency or their currency to essentially their balance sheet. I don't think we are going to rapidly go into a world where we're back to seashells and coffee beans. I think going forward, central banks will define their currencies, whether that be digital or physical, in the form of paper notes and coins. And I think what we're talking about here is what happens in the cross-border space. The cross-border space, to some extent, is a bit of the Wild West because there is no one sort of essentially regulating that space. And I can see a lot of private sector companies quickly gravitating towards it. But ultimately, for that cross-border space to be a safe space to operate, central banks have to participate. Now, we can argue as to how they participate, but there has to be some common medium across which this takes place. And the common medium is not a private sector company, Facebook, showing up and saying, we will become the common medium. The common medium has to be a common medium that's not hijacked by the private sector. And that's really what we're talking about. And how can central banks enable that common medium to exist, but still allow private sector participants? And I agree that private sector innovation is really important here. But how do you allow private sector participants to operate across that common medium? The internet, by the way, is a tricky subject because people throw the internet out as the way the future of central bank digital currency should work. But actually, even on the internet, there are certain common mediums that are essentially accepted, and the private sector doesn't get to run off with it. So whether that be DNSSEC or it's the internet protocol or whatever, those are accepted common mediums on which you're able to develop applications and allow YouTube to operate and for me to publish a video and so on and so forth. So those common mediums are really what we're talking about. And we can't run away with it and saying, well, the private sector is going to go off and build its own common medium, and then everybody else will sort of, create their own currencies, and off you go.
Thank you, Jonathan and Renee, for that exchange. I very much like that. Now, maybe let me turn to Rory. So how do you, I think what Renee is saying is that certainly in terms of services, features, private sector participants certainly have an edge because they have the incentives to innovate, to please customers. But central banks would argue that we have modern monetary policy that's based on economic science. We have forward-looking monetary policy. We maintain a unit of account that is very stable through business cycles, which is extremely important for welfare, for public welfare. So, given all these different public policy, policy objectives, do you see any way for the public-private partnerships to work? How do central banks and private sector or international institutions, for that matter, collaborate in this space?
So, as I said in my very first answer, I think that public-private collaboration is absolutely critical in this area. There's no question about that. And so I think that there's truth in what Renee says, there's truth in what Jonathan says, and as usual, the right answer is somewhere in the middle. So there are absolutely areas in this space where the public sector has no comparative advantage. None of us want to have apps written by governments in our phones that basically look like they were written by the East German television company. And but at the same time, in terms of creating trust, in terms of creating financial stability, macroeconomic stability, promoting policy goals, there's no disintermediating governments. Governments are there; they should be there. And so the key is figuring out exactly where the lines are drawn, exactly how governments can incentivize private sector players, ensure compliance with very important public policy goals like anti-money laundering, like countering the financing of terrorism. And so, this is what this whole CPMI-driven process is all about. And it's very hard, and it's just starting. I mean, today is the launch of a roadmap, but the roadmap is just the first stage where you're looking at the map and you have the whole road to travel. And so all of us, in the public sector, on the private sector side, we need to be doing our parts in this process. Now, there are areas of this which are really, the work has to be done by the public sector. So there's no question that in things like harmonizing AML CFT, things like extending opening hours of RTGS systems, that is the work of the public sector, and it will make a huge difference to this cross-border space. On the other hand, there are parts of this that are really private sector responsibility, like harmonizing the ISO 20022 data messages to make sure that there's much greater ability to much richer messaging through the financial system and mutual compatibility. So and what the public sector can do is it can convene and it can drive this process forward, and that's essentially, I think, what this conference is just one piece of.
Thank you, Rory. I think this is a fantastic conversation. Unfortunately, we are almost up in terms of the time allocated to this panel. So let me give each panelist maybe less than a minute for you to summarize and deliver the message, the key message you want to audience to take away from this panel. Let me go to Denelle first.
Thank you so much. There's so much to say on this, but I'll just say two things that I think are really important. The discussion that was just had a few moments ago about not likening this to the internet and being careful of permissionless networks, we have to remember that you're comparing this to Libra, which is a very different thing than what we're trying to focus on. Permissionless networks are the infrastructure layer that allows entities to build on top of them and to innovate and to create awesome ideas and to create products that are going to solve these problems that folks have all over the world. And they're going to solve financial inclusion because you can do it on your phone. You can make it so that people don't have to have bank accounts, and you can do it in 3 to 5 seconds. The comparison with the internet is that infrastructure layer, that technology layer. The notion that the AML and all of the different regulations need to apply here is absolutely agreed upon. And those financial institutions that touch fiat on the edges are the ones that are regulated by all of the different geographies. So we cannot forget that that is the important piece of this. That is what creates the interoperability. That is what makes it so that this all works seamlessly. That is what makes it so that I could send Renee a payment to Germany and to do that in 3 to 5 seconds, and to still use the existing financial infrastructure, but to use these new rails, which make it faster, seamless, and usable for the developers and the end users. So that's just an important point I want everyone to know. Governments are exceptionally good at regulating fiat. We still want them to. Thank you.
Thank you, Denelle. Jonathan.
I think 2 things. Number one, I think the recognition by central banks that they are and will be entering the digital world has been the most important step. And we've seen that already, and we're very excited about it. And I think e-currency's role here is to provide the technological capability for central banks to get up to par with the private sector. The second important thing, and Dong and the IMF here is really important, is that we're having this conversation. The conversation recognizes that central banks and central bank digital currencies are soon going to become a reality. And when that happens, how does cross-border work? And I believe, as I've expressed before, the participation of central banks will actually eliminate the exposure and the risks associated with cross-border. And in the digital world, could actually iron out some of the challenges we have with cross-border payments. So thank you, Dong, for hosting this. Thank you, IMF, for hosting this conversation, because I think this discussion at the public sector level is really important. Thanks.
Thank you, Jonathan. Rory.
So first of all, again, I think that this process, well, first of all, cross-border payments, huge number of stakeholders with very different strengths. Some of them are the innovators in the user experience and reaching unbanked people around the world. That innovation must be preserved, and clearly some of the most innovative companies are going to be fintechs. They're going to be nimble. They're certainly not going to be over-regulated to the point that they can't do what they do best. On the other side, there are governments with sovereign interests. What exactly the governmental infrastructure ends up looking like. It's building cross-border structures among governments requires a lot of trust among those governments, and we're not necessarily at a moment in geopolitical history where there's universal trust. So there are some very interesting experiments of governments basically experimenting with taking over the cross-border payment rails. There's between Thailand and Hong Kong, there's a very interesting experiment, but it's complicated. And so in the interim, there's a lot of work that we can all do together in incrementally improving the current system. And I think that's the agenda that CPMI has laid out so well.
Thank you, Rory. Renee, less than a minute, please.
All right. Yeah, just super quick. Thank you for having us all, and I really enjoyed the conversation, the discussion. Hope it continues. Look, I think in a nutshell, open permissionless systems are critical. I do see central banks launch central bank digital currencies on open permissionless chains, whether that's Zelo or Stellar. But I think that's the future, because so much depends on these being kind of breathing organisms that evolve over time, that make sure that they can always guarantee the best end user experience. And I would urge regulators to acknowledge and incentivize the development of this. And I think it's also a huge benefit from a risk perspective because of the public and transparent nature of these ledgers. And so I think we're very early days, so a lot of this is education, and having those conversations. I wouldn't actually want to suggest that we should build these things today, but we should carefully think about how that kind of unfolds over the future, and in collaboration with all these new technologies that kind of arise.
Thank you so much, Renee. So just before I close this panel, let me just advertise a little bit, as part of the knowledge gathering and knowledge sharing education process, we also published a paper today, IMF staff paper, Digital Money Across Borders, Macro-Financial Implications. It's available on the IMF website. So if you're interested, please take a look. And this has been a fantastic panel. Thank you very much for your participation. I learned a lot. And now let me close this panel. Thank you. Bye-bye.
Thank you, Dom.
Thank you.